I'm Anastasia Amoroso, coming to you from Singapore at the inaugural iCapital Connect 2024 event, and this is Beyond 60/40. Today, I'm joined by Jenifer Zhu Scott, who is a founding partner of iCapital, who shares where she's seen opportunities for artificial intelligence and blockchain to create value in wealth management and financial services. Then I sit down with iCapital Head of International, Marco Bizzozero, to discuss driving the growth of international business here in Asia. Let's get to it. I'm pleased to welcome my first guest today, Jen Zhu Scott, who is the founding partner of iCapital. Jen is a world-renowned technologist and investor, and she's been named to the Forbes World Top 50 Women in Tech. She's been investing in deep technologies and private wealth for over 20 years, and we're so pleased, Jen, to have you here today.
Thank you so much, Anastasia. Great to be here.
It's great to be here with you in Singapore. So I want to start off by asking you, what is, in your mind, the greatest opportunity about artificial intelligence and blockchain, and perhaps the convergence between the two?
In 2017, 2018, we hear everybody talking about blockchain. Nobody was talking about AI. And now everybody's talking about AI, nobody's talking about blockchain. I actually think none of the technology is going to be evolved in isolation. The convergent part of blockchain AI is actually, I think, where the biggest opportunity is. Because right now, the AI model is very much building on harvesting as much as data as possible from individuals, corporates. In the society that AI is so pervasive, drive every aspect of life, it's actually very, very important to keep individuals' data sovereignty and also corporates' data sovereignty. So AI is very good at creates, and blockchain is very good at authenticates. And when you live in a society that every bit of data, every bit of transaction actually generates some economic value, blockchain becomes very important.
From your perspective, what are some of the biggest risks that we need to address when it comes to AI and blockchain?
Biggest risk in AI is the hype of AGI and people monetizing the fear either from geopolitical or over-exaggerate the capability of AI, but also the nature of large language model right now, how data goes in and content comes out, is still essentially a black box. So we think in the social media age in the past 15 years has done a great damage to younger generations' well-being, democracy, fake news, etc. Unfortunately, I think with generative AI, we haven't seen anything yet. We will not be able to distinguish the real footage with the AI generated footage, where to believe, where to trust, right? I think what I'm observing right now in our society, people who know the what and how are not really pausing thinking about the why and why not. And people asking the question why and why not, often either they don't know the how and what, or they don't have the platform to really build, right? This year is the biggest election year in the global politics. More than 100 countries going through elections. So there are a couple of companies that actually go through the media content, especially the photos and footages that become viral, impact a lot of people. They authenticate and start to building this kind of a digital archive that's every single piece of media is verified. And I think 100 years from now, we look back our human history, especially looking back the human digital history, those kind of archive will serve as trusted source instead of whatever you can find online.
Yeah. But let's shift to practice. And at iCapital, you focus on investing in artificial intelligence and blockchain and other deep tech technologies. So maybe give us a flavor for some of the investments that you're seeing that are interesting for you and your clients.
Our thesis is that, number one, a large language model is probably going to be commoditized. And there may be 5 companies in the world who can truly do that. If you look at OpenAI, just raised $6.6 billion on equity and another $4+ billion on credit from various banks. That's $10+ billion is roughly about 18 months of their runway, which is crazy. So
right.
I don't think there will be more than a handful of companies who will truly be able to do this. And even a handful of companies at some point, they will have to face the reality, how is this ROI? So we tend to invest in companies that have genuine innovation, such as U.com. It's a US-based company, uses generative AI, NLP to imagine what search engine should be. So my search engine actually lives on WhatsApp, and I ask my bot a question, and it will summarize everything online, but also give me the link of the original source. So it's not completely, regurgitated, and you don't know if it's true or not. You can verify. We also invest in companies that have proprietary data. That's very, very important for the industry. So, for example, Sentia is also a U.S. company. They build large language model for talents. So how do you analyze the talent? I'm also quite excited for some of the boring AI companies we invest in. A Hong Kong-based company called Cleardo AI, and they are not using any fancy AI. They're basically using local language NLP and build a customer service bot, lives on all the messaging apps. And now they are one of the largest SME service bots in the world, and double-digit growth, 40% annual growth.
So they are able to compete with some of the larger tech companies.
Yes, which is super exciting. You find the niche, and you make it, market entry very, very easy, and really truly solve a big problem. You could be a flower shop in Brazil and pay a few $100s, and you can have a bot to serve your customers.
What about on the blockchain side? Are there any specific standout investment opportunities that you see there?
We exclusively focus on solutions that will serve regulated institutions. And it will be very exciting to see what kind of change we'll make in terms of regulatory side on digital assets in the U.S. So I think the adoption by large regulated institutions will put a lot of capital into crypto. I think, we haven't seen anything yet. So the most exciting time for institutions like Goldman, BlackRock, etc., like full speed going to this space will completely change the landscape, and tokenization as well.
And do you think that's a good idea?
I think overall is a very necessary idea, because it brings liquidity, fractionalized transaction, make a lot of transaction immutable, therefore, very easy to keep, record, etc. But also keep a lot of assets become very programmable, right? If you're issuers or if you're intermediary, being programmable will significantly improve the efficiency and transparency of those transactions. However, right now, I think there's a misunderstanding in terms of putting asset on public chain or private chain. Most of the banks and institutions, when they say tokenization, they're actually putting assets on their private chain, which becomes problematic for inter-institution transactions. I think that's a missed opportunity. So I'm on the board of right now largest Layer 1 blockchain in the world. The idea is to really make this kind of very highly scalable Web 2 world ready, Web 3 technology to serve the financial institutions, gaming industry, etc.
But what do you think it would take to actually kind of unleash that adoption more broadly?
So I'm a student of math, but I spend a lot of time reading history. And I think whenever we're facing some big challenges, often you can find references that happen in history. Right now, we're at the stage where every single institution is thinking for themselves. They are in kind of a zero-sum, competing kind of mindset. But if we look at where New York Stock Exchange came about, it's actually multiple institutions dropped their competitive stance and came together and decided to, look, guys, let's make a market, right? So I think right now for digital assets, institutions need to come together and make a market together. If you each build your walled garden, it's defeating the purpose. You have to have this kind of interoperability between different assets, between different institutions. That requires collaboration.
Right.
So zero-sum mentality does not work.
Well, we're a huge believer in that. And the iCapital DLT, the distributed ledger technology, focuses on just that, bringing the consortium together to make sure that everybody has the visibility and transparency into how a fund gets transacted in and how the capital calls happen. So, Jen, this has been fantastic, and I could ask you so many more questions, but I guess my last one, if you were not doing AI or blockchain, where would you be focused on?
I always say if I want to do a PhD now, I probably will either go to neuroscience or quantum physics. I think this is the next mind-blowing rabbit hole that I spend a lot of my spare time reading about. especially with the AI, the more you want to understand how machine intelligence could work and what would not work, you have to understand our human brain. The origin of intelligence is one of the biggest mysteries of our world. And I would love to have time to just dig very deep in those fields.
I would love for you to do that. As I mentioned in the beginning, you were thinking about blockchain and artificial intelligence well before, it became mainstream. So pay attention. Jen is thinking about quantum physics right now. Jen, this has been fantastic. Thanks so much for joining us here in Singapore.
Thank you so much.
Today in our Spotlight segment, we're focusing on growth of alternatives in Asia. And I'm here in Singapore for our iCapital Connect event, where we're expanding our presence in the region. And here to talk about that is Marco Bizzozero, who is the head of international for iCapital. Marco, thanks so much for joining me today.
Thank you for having me here.
It's great. We've certainly seen quite a lot of growth in international at iCapital, but particularly in Asia. So what is the current status of the global presence as you see it today?
Well, I think we can say today that iCapital is a truly global company and operating globally, following the same mission that we had when we started the company 11 years ago, which is making alternative investment, private market more accessible for the wealth management industry. Over the past 4 years, we accelerated our growth internationally. And today we are present in all the international market. We have a strong presence in Europe. We're growing our presence in Asia. We're going to be present in the Middle East. We have a strong presence in Latin America and Canada. We have now around 400 people in 7 international offices in Zurich, in London, in Hong Kong, Singapore, Tokyo, Toronto, and then our large technology hub in Lisbon. Out of the 200 billion that we have on our platforms at iCapital globally, already 29 billions are from various well-managed organizations across all the international regions.
That's quite a significant presence already for iCapital, but what are the future plans? Where might we be expanding next?
Our future plans are driven by the significant growth that you are experiencing in the private market. Private market was $1 trillion in year 2000. It's currently around 15 trillion and expected to double or triple over the next 10 years. However, the allocation to the asset class from individual investor is still low single digit. We have now well-managed organizations that want to increase the allocation, and we are here to support them in this journey. Our growth and plans for the future are even driven by 2 major pillars. One, proximity, being close to clients. And we have, as I mentioned, 7 offices already outside of the US. We will add more to be closer to client. Australia is a very important market. We'll open an office soon in Australia. Middle East is another important region where we're going to have a presence.
Yeah, so some of that growth is well aligned with what our clients are doing and certainly interest that you see from other regions of the world. And, Marco, I guess the last point is, what is driving some of the interest behind, expanding globally and, increasing allocations to alternatives internationally, but maybe particularly here in Asia as well?
But I would say the driver of growth is a combination of 3 things. I mean, first of all, we have the wealth management industry, which is growing, and the asset allocation for individual investors is still very low. We have this global wealth management industry, which is going from $100 trillion to $150 in the next 5 years, where the international market are approximately half of it, and Asia is contributing for 2/3 of the growth. So we have this growth combined with low allocation, which is a major driver. 2 is the fact that wealth creation is more and more happening when companies are private, beyond the public market. This is a major driver of wealth manager ensuring access to this asset class. There is quite a few interesting statistics that demonstrate these trends. We have today 1/3 less of public companies compared to 20 years ago.
Yeah.
We have the fact that companies stay private for longer, and if they go public much later in their life cycles. And we have this famous statistic of 95% of the company with more than 250 million in sales, which are private. There is this private market, which is now more reflective of the real economy. And the third component is technology and education, which are there to support the wealth manager in this journey of making this asset class more inclusive.
Right. Well, it is a journey indeed. It's been a successful one, and I'm sure we're going to continue to expand on that to align with the client interest and all of our key stakeholders. So Marco, thanks so much for joining me today.
Thank you very much for having me here.
Thank you. And we'd like to hear from you. Send us an email at yourquestion@icapitalnetwork.com and let us know what questions are the top of mind for you and your clients. I'm Anastasia Amoroso, and thank you for joining us today on Beyond 60/40. We'll see you next time.